guys, I don't know a lot about this next topic.
Same. I was going to say very interesting.
But we're going to talk about it because maybe some people watching can comment and share and give us some more insight on the personal front lines. I am not a part of this conversation, but I know we need to have this conversation. This is new student loan repayment plan could make it easier for borrowers to become homeowners. I think the article title is a little bit of a stretch because I think there's like 3 to 19 steps in between those two words, repayment plan and borrowers becoming homeowners. So a new, more affordable repayment plan for federal student loan borrowers may come with another advantage. It could make it easier to become a homeowner. It's like this 1-2 punch. That's not really a 1-2 punch. It's like step 1 is separated by 12 other steps before you get to the homeowner part. Yeah. So that's my kind of right out the gate statement. Half of student loan borrowers who haven't yet purchased a home say their education debt is delaying them from doing so, according to a 2021 report by the National Association of Realtors. In previous conversations we've had about affordability and about generational stuff, most of our comments in shorts and in the long form videos are from millennials saying, I can't afford a house because of this or because of that or inflation or student loans or whatever. And now we're not talking about student loans for like 20 grand, 30 grand. We're talking hundreds of thousands of dollars of student loan debt. So let's kind of go through this.
It's easy, right? So, I mean, I just ran an application 5 months ago. In this case, it wasn't a Gen Z. It wasn't a millennial. Person was much older. But she had $299,000 worth of debt.
What?
Yes.
Was that the one that was
on her person or on behalf of a child?
Her sons? No, on her. No children, which is crazy.
She's like an anesthesiologist, right? She's like a doctor.
And I'll tell you this. No, it's in the education industry. She was only making around $87,000 a year income. So it just didn't match to me, right? I think a lot of times because you get these student loans, sometimes there's money that they get, and it just feels like, well, maybe I don't have to go to work, and I'll just stick to,
loans.
Getting loans. So it's pretty crazy. So seeing these things,
that is nuts.
I see. I mean, I had another one where we're about the same age, and they're still paying student loans.
So here was my argument with this. If you're now reducing the payment that was already reduced, oh, great. You're for sure never going to pay them off now.
That's it.
Oh, awesome.
Well, yeah, there's that part. But again, that problem kind of exists on the other side of the fence for us.
Yeah. No, of course.
The argument is it's going to alleviate their debt-to-income ratio and help them be able to afford more. But I know that's the expense of something else. There's a functional question I have for you guys, though.
Yeah.
We have a rule that you have to hit the borrower with a certain percentage of the payment or certain percentage of the loan balance as if it were their monthly payment.
Correct.
Now, I know that's an underwriting rule. Is that at the Fannie and Freddie level, or is that at the bank
VA,
level?
FHA. It's a Fannie and Freddie. It's actually a guideline, yes.
Okay, so it's a guideline. So now here's the issue. Okay, I'm glad I wanted to ask it to clarify, because here's going to be the problem. You have to have Fannie Mae, Freddie Mac, Ginnie, and all these agencies go along and be forced by the hand of the rule of law to do this and make it what the actual payment is going to be versus the proposed hypothetical payment while under home ownership.
Yeah.
And that's where the threat comes to the bank and to Fannie and all this, is because this person, even if you don't hit them with their full payment now and their payment, let's say it's even deferred, it's going to come out of deferment at some point while they're an owner and while they have a mortgage, which means that has to be considered in qualification.
Correct.
Well, one of the things I saw right here is that even if let's say they cut down that that payment, on average is only going to help you by 1.5 to 3.6% on your debt to income ratio. And I mean, how?
Well, that's good if you're already on the ledge of that. But
what if you're still nowhere there? Like, oh, great! Like now I have like what, 20K, 100K more that 10K more that I can purchase. So I still think that maybe not for everybody this is going to be a solution, because I also think the people that get hit the hardest the most is if when you have 100K, 200K, 300K, student debt, then now you're paying hundreds of dollars a month in your quote unquote monthly payment for your student debt. So even if you take that away, sometimes it doesn't even matter. You need income. That's at the bottom. At the end of the day, you need more income if you want to be able to afford more.
That's it.
Yeah, you can do a debt offset, but if your income doesn't change as well, the debt offset may or may not help you. It may only help you that 1.3 or whatever percent, 1.5 to 3.6%. But here's the thing: chime in if this is you. Like if you are watching this and you see this segment or you see this short, is this you where this this plan of a reduced student loan payment actually helped you qualify for a home? I want to know.
Yeah, I'd like to know.
Here's why. Not because I want to be right on the other side of the argument. I want to celebrate.
No,
like if this
exactly.
actually helps people, that's fantastic. Let's tell more
And
people
here's the
about
thing.
it.
I
so
like what I
it.
do like about the article. It's going to get people to start thinking like, well, hey, there's a new program that's out. I have a student loan. I didn't think I qualify with it. So it's going to raise a question, right? Let me see about that. So that's a good thing too.
So here's something I thought of. Remember how we talk about insurance and how carriers are leaving California, and we got these big name insurance carriers that are either leaving or if they're renewing, the premiums are through the roof. You guys are writing premium estimates for like 80, 90, $100 a month. Now it's like $350 a month for premiums.
Yeah.
This example in this chart says someone who earned $90,000 a year could see their monthly payment shrink from $568 to $238. Okay, that
helps.
Well, yeah, it's $350 about, right?
Yeah.
Okay. How much did I just say insurance was a month?
$350.
About $350.
There goes your $350.
That could be making up the difference of the insurance premium cost because of the higher premium amount. So this might actually save someone in that sense. Again, step number one is they want to try to see if this will actually help people qualify based on the actual ratio itself. But even if you are currently qualifying and that premium kicks you in the butt, well, maybe that's your premium right there.
That's it.
It could be. But again, this is a $90,000 example. And, this chart has like estimates in the proposal. So, yeah.
I mean, we're not telling you not to go to school.
No. I'm not saying that at all.
Go, you got debt, you got this. I mean, the good thing is there's some solutions here.
I don't think these two sides are as close as the
As
article
it
wants
is,
them to
correct.
be. Let me be
that's what I
completely
wondered.
candid. I don't think they're like
Absolutely.
this close. They're like, can you pull my arm over that way? And you
I
pull
feel
my
it
arm
was like, quick, throw something on the wall. Oh, yeah, this looks good. Let's see how that goes.
Yeah, I know it's probably easy for us to like armshare quarterback CNBC.
The headline was kind of like,
whatever,
oh, whoa. I kind of read it. I was like, okay. And then I read it. I'm like,
Well, look, here's the deal, and you guys know this, and I hope everyone watching this knows this, is that the monthly payments are competing for that dollar every single month.
Yeah.
We're proposing a mortgage payment that includes taxes and insurance and HOA if there's an HOA, and so we're proposing that and trying to get you approved for a home, while at the same time we're competing, your money is being competed for by your car payment, your credit card payments, any store credit cards you have, your student loan that you have to pay every single month. So, there's a massive competition for your money that's running up against your aspiration to be in home ownership, and maybe this will help some people, maybe it won't. But in the end, it's going to be the math and the willingness of the person.
That's it.
Yeah.
It's all in the math.
Yeah. So paying down other debt will also help you. Whether that means transferring, high interest rate credit cards, 0% interest rate credit cards for 12 or 16 months or 18 months, whatever. Taking advantage of this plan if that qualifies for your federal loan.
That's right.
Maybe that would help you. I know nothing about this actual loan program other than it does relate to housing and real estate, and I'm really curious to see who this will help.
Yeah.
Any other thoughts about this one? I have zero loan debt.
No,
Do you have any loan debt?
No,
you have
I
any
don't.
loan debt? No
loan debt.
No, I'm just glad that
I dropped out.
The good thing is, again, I'm glad with the report because it's like
That was too expensive for me. Sorry. They didn't approve me for loans.
yeah. This
Sorry
is just
to
going to
cut you
get
off,
people that do have the student loans to just go out there and ask questions. So that's a good thing about this.
Yeah. Yeah, if you do have questions, of course, reach out to your local marketplace expert. If you're here in San Diego, of course, you can reach out to us. But if you're not in San Diego, you're watching this out of state or somewhere else, you can find someone in your region that can talk to you about this specifically to your case. In your instance, this is debt to income ratio at the personal level.
Yeah.
So when it comes down to qualifying, I think step number one is, are you part of this program? And is your student loan part of this program? And then does this program help you in qualifying, yes or no? All the other things that we typically talk about, like getting your credit in line, paying down your debt, making sure you make all your payments on time, saving money, all those things still apply. You still need to do all those things in order to be qualified to buy a house. So our core set of advice pieces to people in order to get ready to buy a home still exist. This just might be a little bit of a steroid shot for some of you who are being handcuffed and held down by super high loan payments.
That's it.